Hi, this is Peter from Game of Trades. I'm here to help you navigate through this crazy market, so make sure to subscribe so that we can help you every step of the way. Shout out to Squarespace for sponsoring today's video. Now in this video, we're going to take a look at some of the price action we've been seeing on the markets in the past few days. So this is going to be more of a technical trading video. We're also going to post more of a long-term valuation analysis of the S&P 500 and go back to the dot-com bubble to compare what's happening in 2020 to previous bubbles. So that's going to be posted this weekend. But today we're really going to focus on that short-term price action. So we're going to put up the MACD and focus in on what's been happening over the past few days. Now, just a reminder of what our strategy is right now. S&P 500 has a bullish structure. We have a leg up, major rally right here, a consolidation range, and then a breakout, right? So we have a short-term bullish bias. That's from a trading standpoint. From an investment standpoint, we're out of stocks. We've been in gold, in crypto, but not in the stock market. But we're definitely looking to take advantage of these last big moves on the S&P 500, which will ultimately, we think, lead to a long-term top in the stock market. In fact, we're going to take a look at whether the next top could be a significant top, right? On both of these occasions right here, we said this is not likely to be a long-term top. And so if you stick around throughout this video, you'll find out that this next potential top that we're going to see over the next few weeks could potentially be a long-term top and not see new all-time highs in the following weeks or months from that top. So what's happening on the chart right now? Let's focus in a little bit closer, put a trend line up that we've been following. So we had this wedge pattern right here with nice MACD divergence right here. So that tells you price is going up, the momentum is going down. It tells you there might be somewhat of a correction in the next few days. That's definitely something we take a look at in the markets, but you absolutely need to take into context what has happened before. If you're coming out of a major consolidation and you've broken out, chances are that this wedge pattern will lead to a shallow correction. And that's what we've been expecting. We saw this wedge pattern, but we said we're likely not going to exceed the 3,540 level. It's not going to go below that. And so the price action we've seen so far is very, very bullish without a doubt. Can it still break down and head to these levels? Absolutely, anything can happen. But right now, it doesn't look like that's going to be the case. When you have this type of wedge pattern with these types of divergences on the 8-hour chart, so that's quite a large time frame. It's not like the 15-minute or the 1-hour chart. It's a longer time frame. So it is definitely something to be aware of. And it usually leads either to a correction in price. So you get a sharp drop, which is why we said we could see a visit of these support levels, or a correction in time. And so you have a sideways consolidation for a while, and then you have a breakout and the uptrend resumes. This is really getting deep into the dynamics of the market. Divergences are basically telling you the move is overextended. It needs to take a breath. So either in price or in time, or both. And so that's something we've seen, over and over again on this rally. When you have these divergences, we had a similar scenario right here. Nice little wedge pattern where we had a higher high and a lower high on the MACD telling you momentum's a little bit overextended. We had a breakdown, a sideways period of consolidation, and then an ultimate breakout just a few days later. So that is strong price action on the market. And that's something we expect could happen right now if we don't get a big breakout. If we don't get a big breakout on the market, we could see, again, a period of sideways consolidation, maybe for the next few days, and then ultimately break out. So again, we're keeping our long trade on the S&P 500. We opened up our position right here, and we've so far hit target 1, target 2, and we're starting to head for target 3, and we're likely going to put a fourth target at around 3,900 points. And by the way, this is a trade setup going back to beginning of November, right? Look at this. This was the breakout of the consolidation, backtest of that breakout, and that's where we entered. We had our stop loss and the aligned targets. So that's what's going on the S&P 500. Nothing extremely exciting, and that's why I quickly want to move on to talk about the next potential top. So when the markets went out and made that big red candle right here, we took out our positions. We had bought the dip in June back here, and we had a trend line going back all the way here, and we said we're going to be long on the markets until this trend line breaks. What happened here? We broke that trend line, we got out of our positions, and then the markets went on to make a large period of consolidation. Throughout this entire period right here, we said this was not the top. We're going to exceed these highs at one point. And I can tell you, it's not a very easy thing to say that. There were a lot of people talking about this being the long-term top in the stock market. It was exactly 6 months after the bottom. That was somewhat similar to what happened in 1929. So there were a couple of things that aligned, but not the sentiment. And that's what we focused on a lot throughout this period. If this was really an all-time high top, like we saw right here, like we saw here, like we saw in every major top in the market, like 2008 and 2000, you would have wanted to see the sentiment be bullish right here. And that was not the case. Believe it or not, people were still bearish at this top right here. And I'm going to show you the sentiment. This is the AAII sentiment survey looking at the number of bears in the market, number of people who think the market is going to go down in the next 6 months. And so you can see what happened here. I'm going to zoom in to the last few weeks. This was the top I'm referring to, and look at the number of bears. It was still very elevated. We were still in a very bearish sentiment, and so it was unlikely that this was the top. Look at the previous top and look at where the bears were. It was much, much lower. Same thing right here, right? We had very low amount of bears in the market at the very top, and same thing here, right? A little bit higher, but still relatively low to what we saw here at the top in September. You'll notice that what's happened over the past few weeks is that we've had the bearish sentiment drop down to record low levels, very similar to the type of sentiment we saw before this top right here. So that's why I believe now, not here, but now we could potentially see a long-term top. And when I say long-term, that's either a few months or even a few years, depending on how significant that top actually is. Now, going back to the S&P 500, don't get me wrong. That doesn't mean I think the market is going to top now, right? We're still long on the S&P 500. If I believe that, we would exit our trade. We still think there's some room left to go for this run up and that it could actually accelerate to the upside. And that's something we've been saying for the last few days, few weeks. Every major rally here, look at this rally and look at this rally. The high liquidity in the markets right now seems to push the markets to a blow off top every time we have an uptrend. So have we had a blow off top yet? Absolutely not. We have only just broken out of this consolidation. We're breaking out and now we're in an uptrend, and we believe we might see an acceleration to the upside. By the way, make sure to like this video if you're enjoying. We really try and put our opinion out there, try and say what we believe is going to happen in the markets. And sometimes that does backfire when we get things wrong, right? We had a strong bearish thesis right here. We believe that we were at the beginning stages of a new bear market. We expected this move to fail at resistance right here. And so we tried shorting the market, and that obviously did not turn out very well. We had to readapt our strategy and actually buy the dip in June quite heavily. Now, since then, we have been pretty accurate on the stock market. At least our members at gameoftrades.net are very satisfied. But of course, do not take my word for it. Do make your own research before investing or trading in the stock market or any asset class whatsoever. Nobody has a crystal ball, and although we believe it's unlikely that the stock market is going to start crashing throughout the next week, that is still a scenario that can happen, right? If we see a big bank or a big retailer going bankrupt tomorrow, that might have a domino effect and start putting some pressure in the stock market. Is this our favorite scenario in the short term? No. We believe that's going to happen a little bit later down the road, but not now. So don't just jump into the stock market blindly. In fact, you can take a look at the put call ratio and you'll see we're no longer in that no risk zone that we've been talking about. We talked about a green zone right here. This is the green zone for the put call ratio. And we talked about a red zone on this put call ratio as well. And so you'll notice right now this ratio is sitting at extreme lows. So it's not a sell signal on its own, but it tells you there's risk in the market right now. And so you want to step in and buy when the ratio's in this green zone, not when it's in this red zone right here. So I hope that's clear. Again, if you enjoyed this video, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time. Squarespace gives you a powerful and beautiful online platform from which to create your website. Stand out in any inbox with Squarespace email campaigns. You can add online booking and scheduling for your classes or your sessions to your Squarespace website easily. Refine your email strategy with real-time campaign and website analytics from one source, and learn what content leads to higher engagement. Go to squarespace.com for your free trial, and when you're ready to launch, go to squarespace.com/gameoftrades to save 10% off your first purchase of a website or a domain.